Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, a US reversal as Nvidia and AMD are set to resume some AI chip sales to China. Plus, we're live from the inaugural Pennsylvania Energy and Innovation event. Our conversations with US Energy Secretary Chris Wright and White House AI and crypto czar David Saxs. An AI startup, Cognition, has agreed to buy what remains of Windsurf for an undisclosed sum. Both CEOs join us later this hour. Let's get back to our top story, and that is that Nvidia and AMD will start selling some AI chips back into China after the administration and US government signaled that they would secure the licenses and approvals to do so. Nvidia continues to push higher. Fresh record highs, $4.2 trillion market cap company. We know the story there. Jensen Huang right now is in China. AMD trading at its highest level since October. There are many questions about why now. Let's get out to Washington, D.C. Bloomberg's Mike Shepard, and that's where I start. The timing of this, Mike, very interesting. What do you make of it?
Well, it's fascinating. This announcement today from Nvidia in the overnight hours comes less than a week after Jensen Huang sat down with President Donald Trump in Washington at the White House for a closed-door meeting. Now, we don't know what was said in private between the two men, but one thing we do know is that Jensen Huang has been clear in his message that U.S. export controls that have hit his company particularly hard have been a failure and that put U.S. competitiveness at risk. His vision is that if Nvidia is unable to sell a modified and slowed down version of its AI chip into China, the U.S. will be ceding that market in essence to Nvidia's chief Chinese rival, Huawei Technologies. And that would set the stage potentially, Ed, for Huawei to then start exporting some of that AI technology into other countries where Nvidia would also like to have a toehold and bigger footprint. For Jensen Huang, he really wants the global rollout of AI to be defined by what he calls the American stack of technology rather than the Chinese one, Ed.
I think we need to talk about Nvidia's business here as well, right? This is the H20 chip. And when they stopped shipping the H20 to China, we were able to quantify the impact, at least to the top line of Nvidia's business. What do we know will happen in the second half of this year in terms of sales and what business they can claw back?
Well, when they released their results for the first quarter, they did report a $4.5 billion write-down related to those export curbs on the H20 chip. And remember, the H20 chip had been redesigned specifically for the Chinese market to meet earlier rounds of U.S. export curbs that were enacted on national security grounds. Now, the curbs, should they stay in place, would have hit the bottom line even further this coming quarter. They were projecting lost sales of up to $8 billion. But that could all change here, Ed.
There's the trade and business case, and then there's the politics. This was Treasury Secretary Scott Bessent speaking on Bloomberg Television earlier today.
You might say that that was a negotiating chip that we used in Geneva and in London. It was all part of a mosaic. They had things we wanted, we had things they wanted, and we're in a very good place. I expect to meet my Chinese counterpart, the Vice Premier, in the next few weeks.
Was this a bargaining chip, literally, that played into trade talks between the U.S. and China?
Well, it certainly is something that Chinese officials would have raised during the talks. And for the first time, U.S. officials are indicating that the chip export curbs actually emerged as something in the negotiations. It's unclear where they rank, but certainly it helped the U.S. gain access to those rare earth exports from China that American customers had suddenly found difficulty buying as China began to slow down its sales of those crucial products to automakers and other buyers here.
Bloomberg's Mike Shepard in Washington, D.C. Thank you very much. We have some breaking news crossing the Bloomberg terminal, and it involves Polymarket. According to Bloomberg's reporting, both a DOJ and a CFTC investigation into whether Polymarket was accepting trades from US-based users that were in violation of its previous settlement agreements with the federal regulatory bodies have been dismissed. That's according to a Bloomberg source who says that these two investigations from the Biden era are now being terminated. We'll bring you more on that story as we get it, but it's just broken across Bloomberg. Let's stick with crypto. It's been an eventful week in markets. We had tech earnings, but it's also crypto week, which is underway. Joining us now to discuss is Catherine Dowling, Bitwise Asset Management General Counsel and Chief Compliance Officer. And I've got to, Catherine, I want to ask you for your reaction to that story we just broke. I'll go over the reporting. There were two investigations into Polymarket, the US Justice Department and also the CFTC, looking at whether Polymarket was accepting trades. But that was a Biden-era investigation that our reporting says is over. What do you make of that?
You know, Ed, thanks for having me. And it's funny, I spent some hours on the plane last night, and I looked at the number of hours spent on Biden-era lawsuits and investigations, and it was over 10 years combined of man and woman hours spent on these various investigations. What I make of that is part of what we've seen as this tectonic shift of let's get back to fundamentals, and let's make sure that if we're investigating different businesses, that there's really some there. And that really plays into the whole theme of Crypto Week, which is getting to the clarity that the industry has been asking for years.
You're a former assistant U.S. attorney in the economics crime unit, so it's great timing to have you on the program. It is Crypto Week, and what's so interesting on the Bloomberg terminal, there's a lot of contradicting reports, right? There was a report last night that Bitcoin has a lot of room to run because it is Crypto Week and everyone's sort of enthusiastic and talking about it. Actually, there's a bit of profit taking this morning. What is the main tailwind right now that you're seeing for this industry?
The main tailwind is having this basis for institutional capital to enter. When you're looking at from the sidelines, there's still a ton of institutional capital on the sidelines. Why? Because although there's been talk for years, as I just said, about getting to this clarity, we're really finally seeing that momentum actually happen. We're seeing that momentum happen in legislation. We're seeing that momentum happen in bipartisan support and voting behind these key legislative initiatives. And that's key. All of the complexity that we saw behind some of these cases that have been dismissed, that we've just been talking about, that complexity is what breeds the insecurity, is what keeps capital out. They're looking in, they're waiting for that moment. They see the promise of the technology, but they just can't get their arms around the regulatory insecurity they see and they sense. So now we're heading in that direction. You know, someone asked me yesterday, Crypto Week, is this just the crypto industry being loud? And I said, no, this is actually coming from Congress. That is a huge difference, and that's the momentum shift we're seeing. We have bipartisan support with the realization, knowing from years of work from many in the industry that we need to get that clarity, and we're heading finally in that correct direction.
Catherine, this week the House will vote on bills to regulate stablecoins during Crypto Week. Your expectation quickly of what's going to happen?
Expectation is that stablecoin is heading towards signature. That momentum's been there. It's something. It's a piece that you can understand. These are centralized intermediaries that should be regulated. It's hard to have a bipartisan disagreement about that fact. Yes, you can quibble about the language and how we write it up, but I think there's no disagreement that this is an area that should be regulated. And this is all on the heels of the Circle IPO, so we can see that moving forward. Clarity, that hopefully will get through the House, and then we'll see what the Senate does with that. Will they take clarity? Will they create their own? We've been hearing about the Senate version that's going to come out, so we'll see whether those two get squashed together or whether the Senate will look at clarity. And some of that will just depend on the politics that plays out over the next few days during the Crypto Week.
Catherine Dowling of Bitwise Asset Management. Great to have you back on the show. Thank you very much. So coming up, we go live from Pittsburgh, where we speak with the US Energy Secretary, Chris Wright. That conversation you do not want to miss, and it's coming up next. This is Bloomberg Tech. Pittsburgh is host to the inaugural Pennsylvania Energy and Innovation Summit. The event kicks off today with President Trump set to attend in just a few hours. For a look at the future of U.S. energy and tech, Bloomberg's Tyler Kendall is standing by. Tyler.
Thanks so much, Ed, and I'm pleased to say that I'm joined by the U.S. Energy Secretary, Christopher Wright. Secretary Wright, thank you so much for joining Bloomberg. And I want to start with one of the main reasons why we're here in Pittsburgh. There is this surging demand for energy to help power artificial intelligence, and the administration focuses a lot on its deregulation agenda. Do you think that you can accomplish your goals fast enough to keep up with what has been a surge in energy consumption?
I think we will. You're right, it's a challenge. I mean, the agenda of President Trump is to unleash American energy. The last 4 years, the Biden administration was more to shackle American energy. But you're right, there's rapidly rising demand. And what we as the government need to do is enable private businesses to build the things they want to build and invest in the things they want to build. We're not going to do this building ourselves, but we're going to enable private businesses to do it.
Well, I'm glad that you brought up private businesses, and to kind of put a finer point on this idea of urgency, we actually heard from Mark Zuckerberg yesterday, pledging billions that Meta is going to invest in data centers. But it is raising concerns about an energy crisis to fuel it. I'm wondering, have you spoken to Mark Zuckerberg or Meta about their plans?
We speak Meta extensively about their plans. And yeah, there's a number of the hyperscalers that have huge investment opportunities. We're excited about that. This is the newest energy-intensive industry to arise. That's what artificial intelligence is, energy-intensive industry, taking the most sophisticated, most expensive form of energy, electricity, and turning it into intelligence to transform our world and protect our nation. So yeah, Meta has huge investment plans, as does Amazon and Microsoft and Google and the other players in that space. And we need all of them will invest. It's a few $100 billion this year. In fact, you'll hear at the conference today announcements, it was 70 and I think now $90 billion just in the state of Pennsylvania.
When you hear big investments, though, and how much energy that is going to take, what's your level of concern, though, that there is going to perhaps be such a great demand? Can the U.S. really keep up with it?
Absolutely. You know, United States energy production, because of the shale revolution, just exploded in the last 10 or 12 years. Pennsylvania is a massive energy producer today. Pennsylvania exports more energy out of its state than any other state except for Texas. And Pennsylvania could massively grow its energy production, just doesn't have enough pipeline capacity to move that natural gas out of the state. So what's going to happen is more of that gas or additional gas will be consumed in Pennsylvania, turned into electricity, generated intelligence, and keep the United States ahead of China in the AI race.
So I want to talk about oil, and I also want to welcome in our audience that has just joined us. We are talking to the U.S. Energy Secretary, Christopher Wright. I'm Tyler Kendall. I want to show you some of these statistics that our analysts at Bloomberg polled, that the U.S. oil rig count has dropped 13% since late February. It's in the midst of its longest contraction since 2020. I know that there were some incentives in the reconciliation package, but what further incentives is the administration considering to help get forward these oil rigs to continue drilling?
Mostly it's get out of the way. You know, the Biden administration had 4 years, all of government approach to try to, as they said, end fossil fuels. Now that didn't work very well. We went from 82% of American energy coming from fossil fuels before Biden took office to 82%, exactly the same when he left office. Those are just simply the energy sources that power our country and our world today. But it's get out of the way of the marketplace. Right now, U.S. production has grown so fast, as has other places in the world, that prices are maybe at the low end of profitability for producers here. So you see a pullback in activity. You're going to see, with these new investments in economic growth in the United States, we're going to see growth in demand for oil, and of course that'll probably bump prices back up a little bit, keep drillers active.
Well, you mentioned there perhaps a lower price environment, and part of this also, when we're talking about costs that these companies are facing, has to do with tariffs. And I wanted to ask you about copper in particular, which is essential to data centers and getting energy to help power AI. What sort of impact is a 50% copper tariff set to go into effect on August 1st going to have when we're talking about the cost for energy infrastructure?
Well, I think the biggest impact of that 50% tariff on copper is going to speed up copper mining in the United States. We have enormous copper resources here. We have some huge mines that have been trying to get going for years. We want to get copper production growing rapidly in this country. Copper, like steel, is just essential to everything that happens in the world.
Should we expect the energy industry to get some sort of tariff carve-out moving forward?
I believe the president plans no special carve-outs. He wants to reindustrialize the United States of America. There's a lot of tools to do that. Make it easy to invest in the United States, make it attractive to invest in the United States, and tariffs are an additional element of that toolbox.
I'm sure you're talking to industry, though. Is
Yes.
a carve-out on the table? Are there any negotiations underway for, say, the oil industry to get a carve-out when it comes to the equipment that they use in the field, like copper or steel, for example?
No discussions right now. We are hearing from the industry, and of course this is true. If you incrementally raise the cost of projects, that hurts the economics of them. We want to do everything we possibly can to maximize investments in the United States so jobs and opportunity come here to our country.
Lastly, I just want to ask you a geopolitical question, because we did hear from President Trump yesterday threatening 100% so-called secondary tariff on countries that import Russian energy supplies. If that were to go into effect, what would that do to prices in the global energy market?
Something like that would likely drive oil prices up. I think President Trump's strong agenda there is to end the war in Ukraine. Our hope is that that large pressure will have an impact on Russia, and we can bring just a brutal war in Eastern Europe to an end. That's President Trump's goal, is prosperity at home and peace abroad. And the old formulas weren't working very well in that respect. So yeah, President Trump has very different tools, very different negotiating skills, and very different level of boldness. I think we're going to see tremendous growth in peace abroad and prosperity at home.
All right, we have to leave it there. U.S. Energy Secretary Christopher Wright, thank you so much for your time. This has been a conversation here in Pittsburgh on the sidelines of the Pennsylvania Energy and Innovation Summit. I'll toss it back to you.
Bloomberg's Tyler Kendall with U.S. Energy Secretary Chris Wright. Okay, coming up on the program, we're speaking with Nero Talia, co-founder and CEO of Nextdoor. That conversation is up next. This is Bloomberg Tech. The neighborhood networking service Nextdoor has launched a redesigned app with features aimed at making the platform more useful, including safety, local news, and service recommendations. Nextdoor's CEO, president, and co-founder Nero Talia joins us now. Now, look, let's be honest about this. I have a sense of deja vu because I think we've done a Nextdoor 2.0 before. So I'd say this is maybe Nextdoor 3.0, but give me the basics of why you've done it and what you've done.
Well, this is an entirely new Nextdoor. So whether we call it 2.0, 3.0, or 10.0, doesn't matter, because for consumers, this is going to feel and operate like a completely new app, but grounded in what Nextdoor has always cared about, and that is safety alerts, local news, and recommendations from trusted neighbors.
The thing that you and I have discussed a lot in the past is the scale of Nextdoor. So 46 million active users. Going forward with this new focus, what's the metric that you judge success by? Is it the user base or something else?
Well, it is engagement, and you're right. We have over 100 million verified neighbors who've joined Nextdoor, but the potential for Nextdoor, we believe, is much greater. We can and should be one of those social networks that has over 1 billion users, and so we have work to do. And over the last year, the work that we've done is to create a better product to enable more engagement, which will translate into more users, translate into more revenue, translate into profits, et cetera.
The thing I hear a lot in the moment in the domain of social media is time spent, actually including generative AI tools. So how do you do the conversion, somebody that is a registered user or active user to somebody that spends a lot of time on the platform, but using the new offerings that you've put in place?
Well, ultimately, the real ambition of any consumer application is to turn into a daily habit. And so whether you're coming every day for a few minutes or whether you're spending hours every single day, that's where we start. And today, many of our users are only coming weekly or several times per week. So the first thing we do is we ask ourselves, how can we turn this into something that you check the minute that you wake up in the morning and you check before you go to bed at night? Because there are so so many things happening around us, and if things are happening on the neighborhood, they should be on Nextdoor. So that's been our focus and our ambition for the new Nextdoor.
That begs a very interesting, almost academic question, which is if you want Nextdoor to be the first thing someone looks at when they wake up and the last thing before they go to bed, who's Nextdoor's closest competitor?
Well, it's a great question, and I think our greatest competitor is really ourselves. When we talk about Nextdoor...
That's not really a competitor,
well,
come on.
It is, though, because we have an ambition and we have an expectation for what we can deliver to our users that we have not achieved in the past. And so we need to do better. We need to build better product. We need to enable stronger local community. There is no one else today who's built an entire geospatial platform based on where people live. There are lots of local services sites. There are lots of local news sites, but there's no one who's bringing it all together. So if we can do so successfully, we can be that indispensable, essential neighborhood network.
That brings in the local news component. I found this fascinating. Why go into local news? We're in an environment where the big social platforms increasingly are pulling back from news on the platform by choice. That was something that you were sort of jumping into head first.
Well, there's a great quote from the famous venture capitalist Michael Moritz that I just read a couple of weeks ago. And the quote is, local news is as important to a city as air, water, and gas. And we believe that at Nextdoor. Local news is what compels citizens to have civic discourse. It's what helps keep communities stronger. And so as part of this new Nextdoor, we're doing something that we haven't done in our 14-year history. We are inviting local publishers to come to our platform and use it as a distribution mechanism to take their great journalism and spread it to our users. And so we have 3,500 local publishers publishing 50,000 articles every week, and now our users can read that news, they can stay informed, they can engage in conversation, and it's something that isn't happening, to your point, on any of the other social platforms today.
Nero, let's end by talking about M&A, because these strategies, which include local news, there are different mechanisms you can use to grow. How do you think about M&A and moving into the new domains that you want Nextdoor to win in?
Well, every single advisor that I've talked to, either as a private company CEO or as a public company CEO, has said the same thing. You have to operate your company as if it will be around forever, as a single independent entity. And so that's the way that we think about Nextdoor. As a public company, we always have to listen to any conversation that comes our way, but I will tell you, we are 100% focused on achieving our potential as a standalone independent entity.
Nero Talia, CEO, president and co-founder of Nextdoor, back here on the program. Coming up, deals for AI startups continue as Cognition AI agrees to buy the remainder of Windsurf. We'll hear from both of the CEOs next. This is Bloomberg Tech. Welcome back to Bloomberg Tech. There is so much happening in the AI domain that is moving markets as well. Let's start with Coreweave. Coreweave pushing a lot higher. There's news out of Pennsylvania this morning that the company's going to invest $6 billion into an AI data center there. Now remember, Pennsylvania, Pittsburgh in particular, is all the focus this morning as Senator McCormack hosts that inaugural Innovation and Energy Summit. We're going to get to a lot more of that, but the stock really pushing higher, a lot of momentum for Coreweave, up 8%. There is our top story, and it is a clear top story. Nvidia and AMD shares both pushing higher after announcing plans to resume sales of some AI chips into the Chinese market. Why? They've secured assurances from Washington and the administration that they will get the approvals and licenses needed to do so. We'll get much more into that throughout the remainder of this program. Now, as chip stocks saw on that news that semiconductors will be able to sell more of their product to China, the Trump administration is still working out its trading relationship with Beijing. Earlier, Bloomberg's Anne-Marie Horden spoke with Treasury Secretary Scott Bessent. Listen to this.
I can tell you the one thing that we do not want is a digital Belt and Road springing up around the world because other countries or China are substituting for our American chip manufacturers.
This is the same chip, though, that the Trump administration blocked with export controls in April. So why the change in policy now?
Emery, you might say that that was a negotiating chip that we used in Geneva and in London.
So this was part of the trade talks when it comes to Washington and Beijing?
Yes.
Was it a quid pro quo then? As you said, it wasn't, but was it potentially to make sure that you can get the licenses when it comes to rare earths?
Yeah, I think it was all part of a mosaic. They had things we wanted, we had things they wanted, and we're in a very good place. I expect to meet my Chinese counterpart, the vice premier, in the next few weeks.
So when and where will that meeting take place?
We're still working on that. The Chinese leadership has a big conclave at the beginning of August, so we're trying to work out whether that could be in a third country before or after that conclave.
Will the administration release the framework of the Geneva and London talks?
Well, we have released some of it, and I'll tell you that now, having settled on tariffs, on the export controls, we can move on to the next stage of talks. And I think it's very important, both for the global economy, for the U.S. economy, and for the Chinese economy, for us to move on and talk about China opening its markets and the increased domestic and consumer production there.
Are you hoping to get to that next phase before August 12th, when that's currently the détente between these two economies?
Yeah, I think we're in a very good place, and I tell market participants not to worry about August 12th.
That was Treasury Secretary Scott Bessent speaking with Bloomberg's Anne-Marie Horden. Let's get back to Pittsburgh, where the inaugural Pennsylvania Energy and Innovation Summit's underway, and we're going to speak with AI and crypto taking center stage of the energy and its digital future. Joining us now, delighted to say, David Saxs, White House AI and Crypto Czar, Senior Policy Advisor to the President. David, welcome back. It's great to have you, as always, on the program. The focus is
good to
Nvidia.
Be here. Thank you.
Thank you, David. The focus is Nvidia and AMD's ability to now sell in a limited way chips back into the Chinese market. Just your reaction generally to that?
Well, Ed, we still have a policy of not selling our state-of-the-art advanced semiconductors to China. And the H20 is not that. It's a heavily deprecated chip. And that's why the Biden administration allowed the sale of the H20 to China. And this is a continuation of that policy in the larger rubric of the trade negotiations that Secretary Bessent was talking to you about. So this is a heavily deprecated chip. I think that, like Secretary Bessent said, there are some things that China wants from us, there are other things we want from China, and this was all part of the overall trade negotiation.
David, you advised the president on AI policy as well as crypto policy. Do you have any sense of when he met with Jensen Huang last week at the White House, what case Mr. Huang made to the president that it was the right thing to get the American technology stack back into China?
Well, Jensen's been making the case publicly for competing in China, and I think there are a lot of merits to the argument. If you look at developments over the past year, Huawei has advanced very rapidly. They have a new technology called Cloud Matrix, which networks together 384 of their Huawei Ascend chips. Now, the Huawei chip is not as good as the Nvidia chip. The Nvidia chip is 3 times more powerful, but if you network together enough of those chips, you can brute force your way to a similar kind of result. And that is what Huawei has been developing, is this Cloud Matrix 384. So, and there have been reports, including from Bloomberg, that they've started exporting that technology, or they've been seeking to export it. So Huawei is becoming much more competitive. And if you give the whole Chinese market to Huawei, it's a huge subsidy for their R&D. Right? And it basically forces Chinese companies that might be willing to use the H20 to use the Huawei chip and to basically figure out the bugs, work out the kinks of the Cloud Matrix system, and help Huawei scale that up. So I think there is a compelling argument here that you just don't want to hand Huawei the entire Chinese market when Nvidia is capable of competing for a big slice of it with a deprecated, less capable chip. Again, we're not selling our latest, greatest chips to China, but but we can deprive Huawei of basically having this giant market share in China that they can then use to scale up and compete with us globally. So I think this policy is nuanced, and I think it makes a lot of sense.
The report you were referring to that Bloomberg had was that Huawei was going out to some of the Gulf nations and also some of the Southeast Asian nations and offering prior generations of their chip, but also the cloud matrix that you mentioned. The concern being that in dealing with third countries, that there'd be some Chinese access to other nations' technology. How involved have you been, David, in these kinds of talks, in framing the president's thinking that actually just having direct access to lower performance compute is okay with China right now?
Well, look, I'm not going to discuss what I talked to the president about, but I can tell you what I think, which is the Bloomberg story discussed how Huawei was basically trying to make available the Huawei Ascend chip, which is their current chip, which is basically put together in a rack system with Cloud Matrix to create a viable competitor to Nvidia. And I think it is a viable competitor. I think Nvidia and AMD and other American companies have a better product. But if we don't compete across the world, then we will hand the market to China. And one of the reasons that the president went to the Gulf states on that trip is to encourage business relations between the U.S. and the Gulf state. He signed massive investment deals. And one of the deals that we signed was this new AI acceleration partnership, where we want to create a pathway for the Gulf states like UAE to buy American technology, to buy American chips, and to create data centers on the American tech stack. And I can tell you that I don't quite understand why this has proven to be so controversial in Washington, but where these nations like the Gulf states, they have two choices. They can go with an American technology or they can go with a Chinese technology. And if you don't let them buy the American technology, you're pushing them into the arms of China. And a lot of people said, well, China won't be ready to sell for years, but now we see that there are reports that Huawei is out there trying to sell and export the Huawei Ascend chip. So I think it's very important that we enable our American companies to compete in the global market, that we don't tie their hands, that we don't hobble them, because again, it's a zero-sum game. That market share will either belong to our companies like Nvidia, or it's going to belong to Chinese companies like Huawei. There's a very simple test for this. Just look at market share. If 5 years from now, we look across the world and we see that Nvidia or other American companies have 80% market share, it means that we won the AI race. But if we look across the world in 5 years and see that Huawei has 80% market share, then it means that we lost the AI race. So I think it's very important that we do everything we can to encourage American exports. To be sure, we can name our security standards, but this is a very easy trust but verify situation. The chips that we're talking about are really mainframe computers. They're 8 feet tall, they're 3,600 pounds. It's very easy to send inspectors into data centers and count the server racks to make sure that they're where they're supposed to be. So the security concerns can be addressed. I understand that there are some security concerns, but I think they're very easily handled. And what we need to be doing is making sure that we win the AI race globally by making American technology the global standard and not creating a Huawei Belt and Road.
Live on Bloomberg Television and radio worldwide, we're in conversation with David Saxs, Senior Policy Advisor for AI and Crypto, the AI and Crypto Czar. David, I wrote in my newsletter earlier this week about the analogy that Jensen Huang has been using, that the American technology stack should be akin to the US dollar as the world's reserve currency. That's how he would like the administration to approach it. Do you share that view and see some truth in that analogy?
Well, here's the way I see it, and this is really, I think, a Silicon Valley view, because I've been a founder and investor in Silicon Valley for 25 years. And what we see is that the winning technology companies are always the ones that create the biggest ecosystem. They have the most developers on their platform. They have the most apps in their app store. And so they work very, very hard to create a partner ecosystem. And I think that the United States needs to do something similar with the American technology stack. We want the most other countries using our technology, because again, it's a zero-sum game. And it's not just the chips, it's the operating system that runs on those chips. It's the AI models that then are run in these data centers. We want all of that to be American-made and American-powered. And look, to be sure, there are security concerns and we can address them. I don't think that's that hard. But if we hobble our American companies and don't let them participate in the global market, again, we are playing into China's arms and playing into their digital Silk Road. So I think, to me, this is a pretty easy question. I think we do want American technology to be the global standard. It is a little bit like the dollar. There is a network effect there. The reason why everyone loves the dollar is because they know that everybody else will accept it as well. So we do want to have the strongest dollar. We want to be the reserve currency, and we do want our technology to be the global standard.
David, Bloomberg reported this morning that on July 23rd, the president's going to speak in an event titled Winning the AI Race, which you and the rest of the All-In Pod team will be hosting, essentially. I guess that's going to be a moment where we'll have a fuller sense of what the president and this administration's big picture AI policy is going to be, what the big goals are going to be.
That's right. So the president will be giving a keynote address at that. It's a one-day AI conference in Washington, D.C. on July 23rd. It's co-hosted by All In and Hill and Valley Forum, which is also a D.C. and Silicon Valley policy group. And the president, I think, will be giving his first major address on the topic of artificial intelligence, building on the remarks that he's giving here in Pennsylvania today, which are also AI-related and related to energy investment, the kinds of investments we have to make to power the next generation of AI.
David, you've been speaking there in Pittsburgh this morning. What's the main focus on the energy side of this AI story? Energy security is a national security priority, but just simply whether we will have enough energy resources to power the goals of Meta and the other hyperscalers.
Well, Pennsylvania is a huge energy producing state. I think it's our second biggest energy producing state. They have abundant natural gas, which I think in the near term is going to be the power source for these data centers. I think, in about 5 years, we could start seeing nuclear scale up, and the administration believes in that too. We want an all of the above approach. But Pennsylvania is very big in natural gas, and there are major investments being announced here for more fracking, for more grid infrastructure, for more power generation. All of those things are needed to power data centers. AI runs on GPUs that are incredibly power intensive, and these data centers of the future are going to need more power. And the one area, I think, where America is a little bit behind, I think we're winning the AI race pretty much at every level of the stack, except that the size of our power grid has not increased very much over the past decade. If you go over to China, they've roughly doubled the size of their electric grid over the past decade, where ours has only gone up by a couple of % a year. So this is an area where we need to make major new investments, and the president is coming to Pennsylvania today to announce many of those investments. And I think this has been a major priority of the administration, and I think you're going to see a lot more of this.
White House AI and crypto czar David Saxs, thank you very much for coming back on Bloomberg Tech. Okay, coming up, deals for AI startups continue as Cognition AI agrees to buy the remainder of Windsurf. We're going to hear from both of those CEOs next. This is Bloomberg Tech. Internally, the companies were saying it's the perfect fit. What happened? Why did it happen? Windsurf CEO Jeff Wang and Cognition AI CEO Scott Wu join us now live on Bloomberg Tech. Scott, I'll start with you with that simple question. How did all of this come together, please?
Yes, absolutely. And so I think we all, found out about the news around the same time on Friday afternoon. And we were looking at this and just saying, wow, there's such a clean fit of all of these things, both in terms of kind of the products, which is Windsurf is one of the leading IDEs. Cognition builds Devin, the first AI software engineer agent. And so there's a clear offering of IDE and agent. At the same time, both of us have a very clear enterprise focus in terms of how we do business and even kind of the customers that we have, the team that we have, and so on. And it just seems like such a great fit.
Jeff, what I was hearing over the weekend is that some of the investors on both sides might have played a role in sort of brokering that this was a good idea. Is there some truth to that?
Actually, the way that the other deal panned out was it should have been a clean cut. So there were kind of like conversations going, but as interim CEO, you have to find a lot of options for the future of the company. And I think after talking to Scott, it was a done deal in my mind. It was just a perfect fit.
Scott, what's so interesting is like the conviction that Cognition had. Why were you able to move so quickly and just say, you know what, this is a great deal for us?
Yeah, absolutely. Look, I think we are in the AI code space. I think Windsurf is a very kind of different, like complementary offering in the space, but naturally, you know, we see it, we've tried the product ourselves, we've used it a lot, and it helped us just get to conviction very quickly. And Jeff and I talked, and I think, especially with everything going on, it was clear that, you know, the sooner that we could get to an outcome, I think the better for the team and for the customers as well.
What role did Google or even Varun play in this, Jeff? We're trying to unpick a series of deals and chronologies that kind of happened very quickly.
I have to say that the whole Google situation was meant to be a clean cut. So everything at Windsurf was intact. The product, the IP, the go-to-market team, the marketing team, even the enterprise engineering team. And it just so happened that these are the components that Cognition was looking for. So I want to just be clear, like it was structured in a way where it was a clean cut from Google.
What was the mood at Windsurf, Jeff, on Friday when the Google licensing and Aqua hire was confirmed?
Yeah, I had to do an all hands to the team, and I had to tell them the news. And I have to say that was probably the hardest day for 250 people at the company's lives. And I was immediately in action. I don't think I slept maybe 3 hours over the next 72 hours. And my only goal was to get the best solution for the company. And I think now that we're with Cognition, everything is intact. We have an amazing core engineering team with Cognition now. And we also have Windsurf, the product still. Everything is the same. And now we also have Devin. And now we have the foreground agent and the background agent. This is like an amazing combo for the company.
Scott, would you kindly go over the basics of the terms of the deal? Like, was this a cash or stock deal? It started Friday, and by the beginning of this week, it was done.
Yeah. What I can say is that Windsurf employees are, you know, every single Windsurf employee has an immediate consideration as part of this deal. And then from here on out, we are all just one team. And so Windsurf employees are now part of Cognition. We are working on this together and excited to get moving.
When I first learned about Windsurf, it was in the form of Codium. And Jeff, this question to you and Varun. And then the big news was OpenAI and Windsurf. When did you kind of get the sense that wasn't going to happen? I know we're going back over history a little bit here, but actually, you know, in a few years' time, I might look back and go, wow, that was a pretty wild series of events. So when did you look at it and say, okay, OpenAI and Windsurf's not going to happen. What happens next?
I think it was time. So OpenAI, kind of the rumors broke like 3 months ago. And if you think about it, like if 3 months later there's no progress and there's still drama, a lot of it is reported in the news, I'll say, that is a pretty good signal that things are not progressing as fast as you'd like. And I remember the founders of our company were kind of like locked in a conference room for, I think, 6 weeks. And I kind of got the sense that things are probably going to shift in another direction.
Scott, I'd love to talk about technology for a moment, if that's okay. What is it that Windsurf and Cognition can do together?
Absolutely. And so Windsurf is, you know, in one line is an IDE that makes it so that a developer, when they're at the keyboard, can go faster and produce code faster. And Devin is an AI software engineering agent that you can delegate tasks to. And there's a lot of natural integration of how we can work together. You can imagine kicking off the agent to go do a kind of a first pass at a project and then coming in and doing the finishing touches yourself with Windsurf. You can imagine using the IDE to plan, and then once you have the task sorted out, to be able to hand it off. And we're super excited because I think both of us have always been very focused on making software engineering work in the real world. You know, and it's in the last few days, actually, at Cognition, for example, we've announced that both Goldman Sachs and Citibank have been rolling out Devin to their teams. Windsurf has been working with JP Morgan, and similarly, you know, when we go down the customer list, when we go down the sectors, we found a lot of natural partnership.
Jeff, I got the sense from reading, but also speaking to people over the weekend that kind of post-Google, the remainder of the Windsurf team felt a little bit left out in the cold. But on the other hand, that's a great team. You know, was there a moment where you kind of thought, okay, we can carry on alone? Or did the Cognition part of it just say, you know what, we can be better by building with them?
Yeah, so the funny thing is there's no way I can tell the team at the all hands that, oh, we're just going to go get acquired, right? The first thing I had to do is make sure there was an achievable plan, and it's not as exciting as before of breaking frontier AI models, training and getting to the next big thing. It was kind of picking the safe route and making sure everybody could believe in a route that we can do. And on the side, obviously, it was what is the best company that we can work with, and how can I get in touch with them? But I had to keep all the options open there, and Cognition obviously was the best fit for us.
Scott, I think I'm right in saying you've kind of said on social media that this is a real acquisition, but I would be grateful very quickly from each of you, your reflection on what's happened with all of these Aqua hires and what you think the net result of it is.
Yeah, I think it's started to come up more in the market, and I think it's, frankly, it's a bit disappointing, which is, to your point, exactly what you said. There are a lot of great teams that have gotten left behind. And I think in our case, I think we were huge fans of the Windsurf team from the beginning, and we saw an opportunity to work together.
And Jeff, we just have 20 seconds, but your thoughts?
I think me and Scott might have just invented a new model for what's going on in the market right now. If there's Aqua hires going on, there's a lot of valuable pieces left. And I don't want to say pieces, but like even what was left at Windsurf was incredible. And the other important thing to note is all of the investors, the founder shares were wiped off the cap table. It was an entirely employee-owned company. So a lot of people were very happy yesterday, I think is the summary, I'll say. But this might be the new model going forward.
Jeff, CEO of Windsurf, Scott Wu, CEO of Cognition. We got it all in. I'm really grateful to you both. Thank you. That does it for this edition of Bloomberg Tech. Don't forget to check out the podcast. You know where to find it online on all the Bloomberg platforms. Back in San Francisco, unexpectedly, this is Bloomberg Tech.